Yeah, that is thanks for remembering. Thanks for recalling
That's
me.
okay.
Okay, now I'm recording the class right now. So what we're going to be talking about today in there's class, it's how you can initiate an order, how you can execute a buy order, sell order, pending order, take profit, stop loss, how you can do this on your trading chart. This is what I'm going to be talking about in today's class. So
Nice.
let's say, for example, right, actually, I have a trade on some, okay, I don't have a trade right here. Let's say, for example, here on this particular chart right here, I want to take a trade right here. And then I just want to clear this. I want to clear this. Okay, let's hang this down, hang this down, hang this down. Delete all selected. Okay, delete all selected. Okay, I want to remove this grid line. So I want everything be plain clean. Okay, good. So let's say right now I want to take a trade right from this region because I can see the price breaks a certain support region right here. Okay. That price break right here, I want to take a sell order. That is, I want to sell. So for me to do this, this is what I need to do on my trading chart. Number one, you can right click on your mouse. You can right click on your mouse. When you right click on your mouse, it's gonna bring no options out right here. Then you're gonna see an option which says trading.
Yeah.
Just go to the left open box, then you navigate to new order. New order. Just click on new order. It's gonna open up. So here comes the position size you wish to take on your trading account. Remember the smallest size on the trading account. It's 0.01. That is the smallest position size you can actually take. And there we have from 0.10. You have other options to take a bigger position than that, which is the 0.01, 0.02, 0.03, 0.04. So all these figures right here, they actually mean a certain amount. Let's see what is mean right here. In the Forex market, it all depends on the type of account you run. Let's say, for example, you run a standard account, which $1,000 equals to one lot. I have an article on this topic. I'm gonna give you the link after the end of this class so you can read that content.
Okay.
So let's say, for example, you have $1,000 in your account.
Okay.
It's 1,000 euro. Okay, you spend euro right there. So your euro.
Okay.
And this euro, this 1,000 denomination in the Forex market under a standard account, it's being called one lot. Okay. That is on a standard account. It's on a standard account. One lot. So if you open an account with a brokerage firm whereby one standard lot on a standard account will be 1,000, which means if you are executing a trade on that particular account, if you click to open a one lot, which I'm going to show you an example right here. If I click one lot right here, and I can see the figure right here is 1.00. You can see that 1.00. Yeah. So if you are operating a standard account, it means you want to take a trade of approximation of 1,000, maybe 1,000 euro, $1,000, or 1,000 British pound sterling. It all depends on the currency or the currency you fund your account on. Maybe you fund dollar account, maybe a euro account, personal account, whatever currency you fund your account on, a 1,000 of that denomination of that currency equals to one lot that is on the standard account. Well, not some brokerage firms do offer mini account, while some also offer micro account, or some offers cents account. So what all this simply means is, I'm gonna get this off. Okay. What this actually means is, okay, let me clean this up so I can have enough space. What is standard account right here means standard account right here. Standard account. We have the mini account. We have the micro account. We have some broker offer cents account. So right here, $1,000, maybe €1,000, whatever currency base your account is in, it means equals to one lot.
Yes. It is defined somewhere. Is a lot equal to €1,000, or I decide how much is one lot?
One lot on a standard account equals to 1,000 of your base currency, of your currency you fund your account.
So it is a,
so
okay,
whenever you want to open an account, from on a brokerage company, there is an option for you to open. Maybe you want to open a standard account, maybe a mini account, maybe a micro account. There are options for you. So
okay,
it all depends on some brokerage firm. They offer a standard account, while some they offer mini accounts. That is for traders who don't have enough money so that they can at least trade. While some brokerage firm, they offer a micro or account, while some or cents or account. So on a mini account, you have $10,000,
okay,
or maybe €10,000, whatever your currency base is in, equals to one lot.
yes.
So it means there are $10,000 right here on the mini account is one lot. Why on the micro account? It means 1,000, 100,000 equals to one lot. What all this actually means right here is, if you want to operate an account, maybe you want to open a one standard lot account on a mini account, it means you have to execute 10 lots. This 10 lots, this is the size of one lot. This 10 lot right here, if you want to open a standard lot on a mini account, it has to be 10. Why, if you want to open a standard account on a micro account, it will be 100 lot size.
Okay, I get it.
Same goes to the cent or account. So some traders they get confused on this aspect whenever they want to trade. It's very, very simple. All you just have to know is, if you have a standard account, if you want to operate a one lot account, it simply means 100 represents $1,000. So which is $1,000 is one lot. Why on a mini account, it means if you want to operate a $1,000 that is on a mini account, it will be 10 lots. Why on a micro account, it will be 100 lots. And there's so on. So the difference right there is, just know standard account has 1 unit. Why mini account 10 units? Why the micro account, that is 100. So you keep on multiplying your position size by the unit. So if you are running a micro account, that will be times 10 or times 100. If you are running a mini account, that will be times 10. If you are running a standard account, $1,000 simply means one lot. So I will advise you to open the normal standard account, which is the one lot. So you have the option to open it whenever you want to create a real account on a brokerage firm. You have the option to choose maybe standard, micro, or mini. Micro,
So
mini.
depends on the money that I have.
Yes. At least if you those who open micro mini accounts, these are traders who don't fund their account more than $10, $50, $100, or euro, so €50, €10, €100, so that they can have enough margin to execute trade. So that is the major reason whereby they open this. They create this micro mini account for this trader. So I will advise you open a standard account, because sometimes this stuff do get leads to a state of confusion. So the best thing is just stick to the normal standard account. So if you fund the account maybe with €1,000, maybe with €500, maybe with €200, if you want to operate an account. Actually, if you have, let's say for example, you have €1,000 in your trading account, you shouldn't risk more than 5% on that trading account. It all depends on your level of experience. It all depends on your level of experience. But the recommended size, risk size you shouldn't risk more than is 5%. So that means on your total account, don't risk more than €50.
Yes.
That is if you have 1,000 account, which means we're still gonna get into money management. Money management, that's one of our important class, money management. But just to show you what all these figures right here means, so whenever you come across it, so you don't get somehow confused. So this is a standard account right here. So one lot represents 1,000. Why two lots represent $2,000? Why 10 lots represent $10,000? Okay.
Okay. Yes.
So the smallest size right there, what it simply means is 0.1 size simply means 0.0. We have 0.01. We have 0. From 0.01, we have to 0.10. Take note, we have 0.01, 0.02, 0.03 up to 0.10. And then we have 0.2, 0.3, 0.5, up to one lot.
Yes.
So, this on a standard account simply means €1,000.
Okay.
Why this means €100?
Yes.
Why this means €10?
Perfect.
Okay. So, in a situation, let's say, for example, you want to take like maybe three, 4 trades, and on $1,000 on €1,000 account, you shouldn't risk more than 5%. Okay.
Yes.
So it means 5% on this account right here is €50.
Yeah.
So you have to make sure all your stop loss is not more than approximation of €50. Let's say, for example, right here, I'm gonna give an example. Let's say I want to take a trade right here. Actually, I'm gonna give you a software you're gonna use for your risk calculator. Is a risk management calculator for Forex. If you want to take a trade, you can calculate the position size and the risk, which is gonna it will be involved in the trade. Let's, for example, right now you want to take a trade and then you don't want to risk more than €50, maybe €100, maybe €20. The calculator, you're gonna use a calculator to calculate your risk and the amount of size you should take. But I can take trade without using the calculator, because what I just need to do is just measure the distance. Can you hear me?
Yes.
Okay, because it's raining heavily right here. So what you need to do right now is measure the distance. Let's say, for example, I want to take a trade from this region right here. And I don't want to risk more than €20 on this account. I can just, maybe I want my stop loss to be at this region right here. So I can measure from this region right here, down right here. Remember I said this account is operating on the 5 decimal places. So you neglect the fourth figure. So right here, the pips right here is 222 pips.
Yes.
220 pips. So in this type of account right now, I wouldn't want to take more than 0.10. 0.10, practicalize it. Just click on trading, new order, not take 0.01. Just want to sell right here. Sell. I move my stop loss right here. I'm going to move my stop loss from this region. It's my stop loss right here. You can see right now, you can see the risk. I can see minus 15.68.
Ah, okay.
You can see. So on this trade right now, let's say for example, I have $1,000 in this account. My risk right here now is 15 or USD, maybe 15 euro on this trade right here. And we're still going to talk about profit target, risk target, how to calculate your risk profit. We have a lot of topics to discuss in the forex market, but right here there's something called reward ratio, risk reward ratio. That is a risk return. If you were talking about profit in any business, you have to talk about the risk and the return. The higher the risk, the higher the return. The little the risk, the lower the return. So any trade you want to trade in the forex market, you have to make sure you obey the 2 risk ratio reward. What this 2 risk ratio reward simply means is, if for example right here now, the risk right here is 15, say $15 right here. It means if I want to risk $15 right there, then I must be willing to have at least times 2 of my risk. So what would be times 2 of my risk?
$30.
Hmm?
Is $30, no?
Yeah, good. So the times 2 right here must be $30, 30 euro, or maybe $30. So right here. So now this are we can calculate this. So what you need to do right here is move your take profit from this region. Now I'm going to move my take profit to 30. Okay, this 30.
Okay.
See right here now. So right here now I'm risking $15 where I'm targeting $30. So the benefit of using this is to protect your trading account and then to cover some losses, because in the forex market, it's a business. Not all the time, business always bring profit. There are some times in business, there will be some losing time, but the most important aspect in trading is your profit ratio must be more than your loss ratio. So let's say, for example, we have 15 or 5 trades. Okay.
5, sorry?
Trades,
okay.
Yeah, 5 trades, maybe 5 trades in a week. And our target here, we implement the 2 risk or reward ratio.
Okay.
That is, out of 5 trades, let's say for example, out of 5 trades, the worst comes to the worst. That is the worst. Out of 5 trades, you had just 2 winning trades.
Yeah. Okay.
And you have 3 losing trades. It was a very bad week. Wow.
Okay.
3 losing trades. That means on this 2 winning trade, if you implement the 2 risk reward ratio, that will be 2 times 2.
Yeah.
This will be 4 units. Why? Right here, if you have 3 winning or 3 losing trade, that will be you risk 1 times 3. Okay?
Yes.
That will be 3. That means despite you add those 2 winning trades, you still come out with a profit at the end of the week. You can see the secret right there. This when if the worst come to the worst. So let's say, for example, you have out of 5 winning trade, you have 4 winning trade. That will be 4 times 2. That will be 8 units, whereby you have just 1 losing trade. That will be 8 to ratio 1. That is 7. profit, 7 unit profit. So now let's say, for example, you didn't implement this two reward ratio. You just trade, no. That is, you implemented the one risk reward ratio. That means if you are willing to risk 15 euro, then you are willing to gain just 15 euro. It's very bad trading idea. That means out of 5 trades, maybe in a week, and you have those 2 winning trades and you have 3 winning trades, it means this is 2 units, this is 3 units minus plus. That means you still have a losing of 1 minus. So let's say, for example, you implemented the 2 risk reward ratio. You know, this is gonna be 2 times 2 and then 1 times 3. 4 ratio 3. This plus 1. Why this is minus 1. We also have the 3 reward ratio.
So in your opinion, a risk management is good. A good figure is 2 times R.
Yes, that is the minimum. We have 3 ratio.
Okay.
That is, if I'm willing to lose risk like 5 euro, that means I'm willing to have times 3 of my risk. That will be 45 euro. Okay. We have 4 ratio, but
yeah.
Okay, go on. Ask your question.
Can you repeat the last where you use 3 times the risk?
Okay, I'm gonna repeat it. Okay, this is what I mean. Let's say, for example, right here now, you know, the risk right here is $15 right there. Okay, this is where I enter the trade, and this is where my take profit target is right now. So this is 15. This is $15 dollars. This is $30, which means I'm using the 2 risk ratio reward. If I want to use the 3 risk ratio reward right now, what I need to do is make sure this equals to 45.
45. While the loss
is 15 euro.
15.
So it means if I'm willing to lose 15 euro, I'm willing to have times 3 of my risk. So which means if, let's say, for example, in a week, I was able to execute like 5 trades and I have 2 trades, I have 3 losing trade. This will be 2 times 3, and this will be 3 times 1, because I'm losing 1 reward. I'm making target of 3 reward. So this will be 3 ratio 6. You can see, despite 2 winning trade and 3 losing trade, I still have 6 ratio 3. That will be plus 3 winning 3 units. You can see. So that is the secret of money management. That is why they're saying, if you have the best trading system in the world, the best trading strategy in the world, if you don't have proper money management system, you can never make money in the market. For you to make money, you have to have a healthy, reasonable money management system put in place. Okay.
What is the risk if I use a high, like a 10 risk money management? What is the risk? What is the counterpart to have a high number risk?
You know, in the Forex market, the maximum risk ratio you shouldn't go above is 5 risk ratio. Okay. If you say 10 risk ratio, it's something which is not have high low winning or high low probability. It's gonna come to reality, because if you study the market, you can see the market moves market doesn't move in a straight line.
Okay, so the number of the risk that I can take is proportional to the volatility of the market.
Yeah. Thank you. Okay. So you have to study the market before you actually figure out or plan the type of risk ratio you're gonna implement. So let's say, for example, right here now, from this zone right here, market moved up to this zone right here.
Yeah.
This is from this zone. You actually want to take a trade right here. You want to risk one ratio right here. That means from right here, from right here, it's another ratio, another ratio, another ratio. So if you want to take a trade from this zone right here, due to this resistance zone right here, to this support right here.
Okay.
Okay. This means if you are risking one ratio right here, this one ratio right here, this another ratio right here.
Yeah.
So this is 2 right here to ratio 1 right here.
Yes.
So if you say you want to go for 10, 5, 3, 4 ratio right here, it is not reasonable because you have to calculate your risk reward to support and resistance zone on your trading chart.
Okay. Okay.
So you have to look out for the next close resistance and support. We're still going to talk about this in the next one of our class. This is just an introduction. So let's, for right now at the moment, any trade you want to take, be sure you don't go above 2 risk reward and 3 risk reward ratio.
Okay.
We're still going to talk about how or what are the factors that influence, that makes us, that gives the decision of the type of risk reward ratio we're going to implement. Maybe we implement 2 risk ratio, maybe 3 risk ratio, maybe 4 risk ratio. There's some type of trade, whenever you want to take it, the best strategy to use is 2 risk ratio. Why some trade 3 risk ratio? Why some trade 4 risk ratio? But there are factors that can give us or that can accompany our decision in the type of risk reward ratio we have to take, like the distance from the support, distance from the resistance, like the strength of the trend, how healthy is the trend, is it a very strong trend, is it an intermediate trend, is it a short-term trend, is it a long-term trend, is your trading decision going to be on swing trading, is it day trading, is it position trading, or what are fundamental factors coming out in the market that can affect your trade, what is the closest support or resistance zones. These are the factors that helps us to make the right choice, which type of risk reward ratio we going to use. We don't just open our chart, take a trade, and just say, okay, I want to take 2 risk ratio, 3 risk ratio. No, it doesn't work that way. For example, right now, taking this trade right here now, the next support I am targeting right now is this zone right here.
Yeah.
Is this zone right here. So this is what I'm going to do right now. If I'm targeting this support right here, it means my stop loss must be right here. So right here now, let's check how much am I risking. I want to make a profit of $18. So if I want to make a profit of $18 right there, it means I must not risk more than what? More than $9. So my stop loss right there shouldn't be more than,
risk strategy.
Okay. Yes, so that is it. So my risk right here should be around this area right here. Right here. You see right here now, because I want to target the next support. So our target profit is gonna the decision where we have to put our target profit. It's based on the support and resistance zone, the swings high, the swings low. Those are the factors that determines the right place for us to implement our take profit, and the stop loss or decision. Okay.
Yes.
So let's get back to the topic. The main topic is right here is we're going to take a trade. We click on trading right here, new order, and then you can click on 0.01, 0.02, 0.04, 0.05, up and on.
So if I have a lot of 1,000 euro, if I set a new order to 0.01 means that I'm trading 10 euro.
Yes, it means you are trading 10 euro. Okay?
Yes.
Hello, are you right there?
Yes.
It means we are trading 10 euro. Okay?
I get it.
Yeah. So for 10 euro, hang on.
Yes.
0.01 1. On a standard account, it means you are trading 10 euro.
Perfect.
So make sure you obey the rules not to risk more than 5% total on your trading account. Okay?
Okay.
So today's class. Hello?
I hear you very bad now. I don't know why.
Yeah, it's raining right here. It's seriously raining right here. It's raining heavily right here.
It's raining.
Can we postpone the class? Maybe after the rain is off, will you have time?
Okay, no, but we can go forward if you want.
Is it okay for you?
More or less, yes. For the moment, it's still okay.
Because I can barely hear you here as well.
Ah, okay.
Okay, we can still continue, right?
Yes, we can continue, yes.
Okay, well, it's raining right here. Okay, so that is the strategy right there. And now, how can you take your profit? How can you take your profit? You know, this is a trade right here now. We are in a trade right now, which I made for an example for this class. So if you want to take your profit right now, this is how you take your profit. All you need to do is can open a trade. There's a box right here.
Yeah.
At the top right here.
Yes.
There are two options you can close your trade. You can click on the entry point. I'm going to show you the entry point. This is the entry point right here.
Okay.
This is the stop loss. This is the take profit.
Okay.
There are two options you can close your trade. You can click on the entry level right here, right click. You can right click right here.
Okay.
Close sell, close trade.
Okay. So in this case, what does it mean? That I sell at this price?
You said?
What does it mean? Close now.
I can't hear you. You're very so rainy right here. I can't hear you. Can let's postpone the class? Or are you still active today?
Yes.
Maybe after the rain, maybe we wait for after in the next 1 hour. I will message you on WhatsApp. Okay.
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 Great.
Good. I will save the recording right now, so we continue when the rain is done. Okay.
Perfect.
Okay.
Perfect.
Yeah. Okay. So
great.
Back to our previous discussion. Our discussion is if you wanna close our trade, maybe we have a trade on and then we want to get out of the trade, or we want to close the trade with before the trade eventually hits our take profit, which is right here. This is our entry zone. This is our stop loss. Okay. So this is what we do. There are two options whereby you can close your trade. Number one is you can right click on the entry level right here. Just right click. Once you right click, you can click on close sell.
Okay.
Close sell. The first option at the top is modify sell. Modify, maybe you want to change your stop loss level. Okay. You can type it right here. Maybe you want to shift your take profit, you can type it right here. But the shortcut is simplest form to do this is just click on the level right here. Just move it. So move it. So you don't need to go through all those medium right here. So if you want to take your profit, all you need to do right here, just to click right here. Right click on the entry level, then you click on close sell.
In this way, what do I do? I exit from my position immediately.
You said, come again.
If I click close.
Yes.
What does it mean? What does happen? That I exit immediately the position, or what?
Let's check it out right now. So let's click on close right. Let's see what is gonna happen right here. So close, automatically, instantly, the position has been closed.
Okay, so I sell immediately I sell immediately the stock.
You mean you sell? Hello, come again?
Yeah. So what happens now that I sell immediately the asset or what?
You are shorting the USD. Right now, we are on the USD against the Canadian dollar. So we are shorting the USD, buying the Canadian dollar. We are selling the American dollar, buying the Canadian dollar. The currency right
okay,
here.
so with close, I have fixed the stop loss and the take profit.
This just I'm just giving an example how you can close your trade, how you can open a trade. Okay.
Okay.
It's an example. It's just a practical. We are practicalizing it how you can close your position, and then how you can open a position on your MetaTrader 4 or 5. But I will advise you to
then with the last stuff that you did, you closed the trade, right?
Yes, I closed the trade.
Fine. Okay, good.
So if you want to open the trade again right there, this is just what you do. You can right click on your mouse, click on trading, navigate to new order, then choose your position size right here. If it's 0.01, 0.2, whatever you want to trade, make sure remember that 0.1, no, 0.01 simply means no 10, maybe 10 euro, $10. No, 0.02 simply means maybe $20, 20 euro, and then 1.00 means 1,000. That is on a standard lot account. So you execute your order, you press the, maybe if you want to sell, you press this red button right here. This red button is the sell.
Okay.
If you want to buy, this button right here is the buy.
Okay.
So you buy up, you press this button. If you want to sell down, you press this button right here. So in our next class, we're going to discuss about this box right here, market execution. What is it really all about? That will be in the next class. Okay. We're going to discuss what is right here. So now we need to discuss about this box right here. This box right here, this is the stop loss right here, stop loss level right here. Why this is the take profit level right here. If you don't want to drag your stop loss or your take profit on the chart right here, you can simply type the level, the price level right here. You can type the price level right here, the stop level right here. So I will practicalize that now on my chart so you can see. Let's say, for example, right now, I wanna buy the USD against the Canadian dollar. That means I want to buy the American dollar, sell the Canadian dollar. So what I need to do right now, maybe I want to buy this one right here. I want to buy, okay?
Yes.
That is market execution. I'm buying right here. Okay, let's buy now. Buy. Okay. I'm gonna open the position right now. If I want to, if I don't want to shift my stop loss in this level, in this way, which is the most simplest way to shift your stop loss and your take profit. If you don't want to do it in this way, this is actually the way you can actually do it. All you just need to do is right click on the entry level, click on modify.
Yes.
You can, this is the stop loss, the take profit. You can maybe remember your cross share tools. This tool right here, cross share tools. It's just like a ruler for you to know the actual size of a level.
Yes.
Maybe I want to put my stop loss on the 1.42858. So 1.5428, I'll make sure my cross share is on that price level. And then right here, you can see it's on that level. Then I'm going to type in my stop loss right here on my chart, like 1.42795.
But this is you should put a take profit because you are buying.
Yes.
Okay.
Oh yeah. I'm buying right here. This should be my take profit. Sorry, this is my take profit. Thanks for this. My take profit.
No problem.
795. My stop loss is gonna be below right here.
Yes.
So this is my stop loss right there. if you don't want to drag it on your trading chart, you can simply type the like the stop loss right there. But this logic is somehow very time consuming. Let's say you want to quickly execute a order, it's time consuming. Before you have to type, sometimes you can even make a mistake during your typing, things like that. So the best way is whenever you open your position size, you can just drag your stop loss on the chart, drag your take profit on the chart. That is very, very simple. So actually, if you want to implement a pending order, maybe let's say for example right now I have a trade right here. I'm looking out for a trade right here. Let's say right here, let's close this order right here. I'm gonna close this order. If you wanna close this order, you can right click and then close order. Closed. Okay. So let's say for example right now you wanna sell at this level. Let's say you wanna sell when the price reaches this level right here.
Okay.
This way you want to sell. You don't want to sell right here, but you want to sell right here. And then this level right here, I think is at 1.40555. That is the price level you wish to sell. Okay. And then you want maybe your stop loss to be at this region right here, which is this region right here. You want your stop loss to be right here. And then you want your take profit to be at least 2 ratio. Maybe your take profit should be at this 1.3657, maybe at this level right here.
Okay.
This is where the pending order tricks come in. So this is what you need to do in your trading chart. All we need to do is right click on trading, new order, click on new order. Yes. Then we click on market execution.
Yes.
You click right there, you click on pending order.
Okay.
After the pending order has been clicked, you move on to type. You have different options right here. Buy limit, sell limit, buy stop, sell stop. The other will be next week. I'm gonna walk you through what is sell stop, buy stop, sell limit, buy limit. Okay. But if you wanna sell at this level right here, the market is gradually in a bearish trend right now. You wish not to. This is the actual zone you wish to sell. You don't want to sell right here. You want the market to get right here before you actually sell down. So this is what you do. You have to click on sell stop. Whenever the price gets right here, let there be a sell action triggered right at this level. So this is what you do. You just click on sell stop. Then you input this price level right here. You can use your cross share to find out the level right here. That is 1.40098. That is 1.40098. And then maybe your stop loss should be around this zone. That will be 1.42607. That is your stop loss box right here. Remember, this is your stop loss. That will be 1.4 665. That is your stop loss right at this level right here. Okay. And then we want our take profit to be at this level. That is 1.3576. This is our take profit. That will be 1.3560. Okay. Is it right now? Remember your volume, that's your position size. Do you want to take 0.01, 0.02, or 1 lot? You have to choose right here. Remember the rule, do not risk more than 5% of your trading or total account in your equity. So we can choose 0.01 and then
the 5% for all the trades altogether, you mean?
Yes, altogether. So if you want to take like 3 trades, you have to split the 5%. That means maybe on a trade you take 2%. On a particular trade you want 1%. Another one maybe 2%. Just make sure the total summation is not more than 5%. As your trading experience keeps on growing, you can increase to 10%. But that would be when you have started trading, you have been having consistent profit, and then your trading experience is getting more wide. You have more experience that you can. So that is it. And we're gonna talk about leverage, how to use leverage in the trading. I have content on that I'm gonna share with you, but for now,
also in the Forex you can use leverage.
Yes, there is leverage in Forex. That's leveraging for, let's say, for example, right now, and it's for experienced traders. Those are for traders who know what they're doing. Let's say, for example, right now, I have $1,000 in my trading account. I can take maybe 100% of this. That is, I can take one lot.
Okay.
And I can take 200%. I can take 2 lots. I can take 3 lots. I can take 5 lots. $5,000 with just $1 in my account, $1,000 in my account. So it all depends.
But you're risking more than 5% then.
Yes. That is what we call leverage. But it has its own disadvantages and has its own advantages. The disadvantages right there, if the market move against you just in a slight movement, in a little movement, you can have, it can result into a great loss. I'm gonna send you a link to my website. I have a content on leverage. I'm gonna send you a link so you can read through that content. Okay, you're gonna have more understanding about leverage. So that is it. So we are not talking about leverage today, just to show you introduction. So this is actually how you can set your pending order, but we're still gonna discuss about this in the next class. Our entry level right here, we want to enter at this level whenever price get to this level, which is 1.40089. That is 1.40089. So once I click place right now, you're gonna see place. You can see right now the trade is already placed. So if market makes a movement down to this zone right here and touch this line, automatically the market will be triggered.
Okay, interesting.
Let's say, for example, you have made your analysis and you discover that if price can come back again to this level, then it's a strong indication signal that the US dollar is going to fall drastically against the Canadian dollar. The bears are going to take control. Next, say, for example, maybe you have a meeting, maybe you are busy in the work, or maybe you before you leave home in the morning, you have done your analysis, you can implement a pending order, and then you go about with your normal daily activities. Okay, so whenever the market reaches this zone right, automatically the trade will be triggered, and if the market get to your take profit, automatically your trade is being closed.
Nice.
Yeah, and then if the trade goes against you after it has been triggered, automatically if the trade gets this right this year, automatically the trade will be closed off if it gets to your certain stop loss level. So it's an automatical, it's a way to set up your trade, so you don't have to worry. Maybe you miss a trade once you have done your analysis, and you have a analysis review that prices is gonna get to this or maybe certain level right there to sell. You can just implement a pending order. When the price gets right there, automatically the trade will be triggered. Or if you are pessimistic, you think the trade is gonna go up, maybe you wanna buy, you can also put a buy no stop order right there. And if the trade gets to this region right here, automatically the trade will be triggered for a buy no order. So that is the function of the pending order. So next week we're gonna discuss about more about the other market execution. That is the sell limit, the buy stop, the sell stop. What is the similarity? What is the difference between them? And then we're gonna discuss about leverage. Because if you come across, if you want to open your trade on an account in maybe the brokerage firm you choose, if you want to open an account, you'll be given an option to choose the particular leverage, leverage you wish to take. Leverage start from 1.5 or 1.50. We have leverage of 1.00. We have leverage of 1:500. We have leverage up to 1:1000. So I'm gonna forward you the link. You're gonna read all this. So in the next class, you're gonna tell me what you have read. So that is all we have for today. So do you have any question? Or if you need more time to think about the question, you can send me your message, your questions on WhatsApp.
Okay, but why we are stopping now? Sorry.
No, we have, I think we have 15 minutes more. So I want us to use the 15 minutes to ask questions. If there's no any question, we can say continue. We can say continue.
Okay, great. Now, for the moment, this is clear enough. Maybe if you can we do really a practical example with money? Meaning, if I'm on this USD versus Canadian dollars now, and I want to use I want to invest the 5% of my budget, that is 1,000 euro, for example. No?
Okay.
So I want to understand if how much is the take profit if I take some particular figure.
Okay, you mean, let's say for example, right now you want to take a trade right here, and you have 1,000 euro on your account, and then you want to take a trade right here. Okay.
Yes, perfect.
What is the actual position you should risk, and then what is the actual profit target? Okay.
Okay.
Okay. So this is what we need to do. Let's say for example, you have $1,000 in your trading account. This is 1,000 euro. Okay.
Yeah.
And we want to take a trade right here.
Mm-hmm.
Actually, right now this trade is at a support level right here. I wouldn't want to enter right here.
Okay.
Because this trade is at the support region right here. Actually, I am taking this trade. I entered right here. This is where I entered to sell at the break. No, this is my support right here. Support this. I use this rectangular box. Remember the rectangular box I told you can use to identify support and resistance. So after the break of this support region right here, I actually used a pending order right here. Automatically, my trade was being triggered.
Okay.
So I am on the Canadian trade right now. So at this moment right now, this is a support level right now. I wouldn't want to take a trade right here. Not until if price can fall below right here, below this support level, like I did right here. When price got below the right here, I have no trade right here. So I'm gonna only have to put a pending order at this zone right here. Pending order. So this is how I'm gonna implement a pending order. So with my 1,000 euro in my account, I wanna implement a pending order. This is how I'm gonna do it. So here's it. First, I'm gonna delete this. So the target is to enter below this. First, let me implement my horizontal line to the so I can use that to spot my support level. This is support right here. Support right here. So let me check on the daily time frame. Actually, I use the daily time frame to analyze my support and resistance zone. Okay. This is support. Okay, let me check the weekly. Okay, this is the high swing of this week. I want to put it right here. Don't worry, we're still going to talk about this topic in the next one of our class. Okay. Okay, here right now is mine. It's a resistance to this market right here, and then it's support to this uptrend. So market is getting nearer to this support right here now. So market have high tendency to find the support right here, and then price being rejected up right here. So what I want to do right now is, if I can see a failure of swing price break below this support right here, I want price break right here. It all depends on the price action I can figure out right here. If I can see a very decisive volume right here, or a rejection of candle right here, in short, it all depends on what I can see right here. But if I want to take it right here, let's implement our pending order. So this is what I need to do. I'm going to right click, trading, new order. I have $1,000 in my trading account. I don't want to risk more than 5%. What's the 5% of €1? That is 50 euro.
So 0.05.
Yeah, 0.0. It doesn't mean you have to take 0.05. Remember, every pips. Okay, there's something I want to discuss or want to talk about. No, I discuss about pips. That is,
yes, I remember pips.
Yeah. Pips, percentage in points. So yes, where the pips comes in. So let's say, for example, right now, I want to take a trade right here. From this entry zone right here to the stop loss right here. If this is, let's say this is 50 pips. Okay.
Yes.
So if I'm taking a trade right here and I don't want to risk more than 50 or more than 5%, that means this entry zone to this stop loss zone right here should not be more than 5% of risk. That means for every pips right here, for every pips right here, that will be 1 euro. You understand that?
You would be, sorry again?
Let's say, for example, actually this is a topic, this is a future topic we need to talk about in the next time, but I'm going to give an introduction. Right here, let's say, for example, I want to take a trade from this region right here. This way I want to take a trade, okay?
Yes.
I wish to have my stop loss at this zone.
Okay, fine.
We need to measure from this zone right here to this zone right here. How many pips?
Okay, we can measure with the cross, right?
Yes, with a cross chair. Let's do that. From right here to this zone right here. This.
So it's 222.
222, okay?
Okay.
So if I want to risk 5%, which is, the first thing you have to think about is this only the trade you want to take? Is USD Canada the only trade you want to take? Only this.
Yes.
So it means if you are risking your total 5% on this market, if you figure out another trading opportunity in another currency pairs, you wouldn't have to trade it.
Okay.
Not only if you are in profit in USD Canada. That is, do not add to a losing trade, but add to a winning trade. And before you can take other trades in other currency pairs, it means you should have recovered at least 5% of your trade right here. That means we are taking 2 risk-reward ratio right here, okay?
Yes.
You should have gotten at least 1 ratio, which will be what? 5% of your risk. Yes. Before you can take other trade. So if you are in a trade and you haven't gotten at least 5% of your risk, don't open another trade. So that is the first question you need to ask yourself: is this trade I want to take, is it the only trade I wish to take?
Okay.
If the answer is yes.
I said this, I understand very well what you say.
Okay.
I said this just to simplify the calculation.
Yeah. I'm telling you, I'm just letting you know, these are the questions you have to ask yourself. It's a personal question you have to ask yourself before you trade. And that is where that's where we're still gonna, there are a lot of things, a lot of topic we're still gonna cover. A lot of topic, a lot of things. We're still gonna talk about trading psychological analysis, about discipline, about how to control your emotion, about how to set trading rules, trading guidance system. You know, there are some questions you need to ask yourself before you trade. So one of the questions is this market the only trade I want to take today? If the answer is yes, then you can risk your 5% on that market. If the answer is no, then you can split your risk ratio. Okay, if I want to take any other trade opportunity on that currency pair, then let me take just 2% risk right here. And then maybe another trade, 1% risk, maybe another trade, maybe 2% risk. Or okay, I can figure out high probability of high profit right here. Okay, let me risk 3% right here, and I take other 2% in other currency pairs. Or okay, this is the only trade I want to take today. I'm not interested in other currency pairs. Okay, let me risk my total 5% risk right here. So right now we want to risk our total 5% right here. So this is what we need to do right here. I have to put my cross share right here, measure from this one right here. This we are want to enter to this my stop loss right here. This right here, this is 222. Let's make it 200 so we can quickly calculate that. Let's make it 200. So 200 pips right here. Okay?
Okay.
So this is where the calculation comes in. So 200 pips for 5% risk.
Yes.
So for every 0.01, that means in this trade right here, actually you need a calculator. I'm going to send you a Forex calculator which you can use to calculate all this. for, you know, we have to make things very, very simple. You have to make things very simple. So remember, we have one standard lot account. In a one standard lot account, one pip equals to 10 points. It can be 10 euro, it can be $10, it can be 10 pounds. 1 pips of movement equals to $10.
Okay.
So if you are taking 0.10, it means what? 1 pip will be
100 pip.
0.10. If you are taking 0.10, that means 1 pip will be €1 or $1 or £1.
Okay. Okay, I get it.
So one pips of movement will be $1. So if you are taking 0.01, that means one pip will be what? 0.10. So if you multiply 0.10 times 200 pips, that will be what?
Would be 20.
Good. So that means right here, we are risking €20 on our trading account.
Okay.
So if you're going to risk 5%, which is 50, right here, that means you can take 0.0. Can take 0.02. If you are taking 0.02, that means you are risking €40.
You're right. You're right.
So that is it. So if you take 0.03, that means you are risking €60. Actually, you don't have to go through all this stress before you can take a trade, because sometimes this trade is all about timing. You have to get in at the right time, get out at the right time. So I'm going to send you a calculator, a software which you can use to calculate your trading position and trading size. So are you using an Android device?
Yes, I have an Android device.
Okay, I'm going to send you it's an Android application. I'm going to send it to you. You can use that. Actually, I think I have a video. I have a video on how to use that software. I'm going to send you the video as well. Okay.
Okay.
So this.
Thank you very much. I don't want to waste. I don't want to steal more time to you, because I know that you have other lessons as well.
Yes. I even have a student right now waiting for me to get in. So if you have any other question, you can send me on the WhatsApp. So any other question, you just send me a WhatsApp.
No, I'm okay like that. Thanks.
Okay. Have a wonderful day. Okay.
Thank you.
You're welcome. Okay. Bye.